steel, all back up to around 85 or 90% of where they were just before Chinese New Year. But retail, footfall, leisure industries, hospitality, transportation, travel, improving, yes. And interesting to hear, Beijingers and Shanghaiers blogs about how life is changing day by day. But the demand side of China's economy looks pretty soft still to me. And part of that is about unemployment, which is, obviously we all know that the official numbers for unemployment don't really tell us what's going on. There was a poor chap who was head of research at a Chinese securities company that released a report a couple of days ago saying it was over 20%. He's just been demoted from head of research, but nobody really knows what the numbers are, but it's very likely, particularly given underemployment and the fact that a lot of Chinese bridge financing from the government and local governments has been allocated towards companies rather than to individuals. So it's very likely that there are probably tens of maybe 70, 80, 90 million people who might otherwise have been working who aren't at the moment. But also there's been a very kind of substantial increase in the failures of small and medium-sized enterprises. So about 500,000 small and medium-sized enterprises, most of which hadn't been in operation for more than 3 years, failed in Q1. The reason that I'm kind of a bit pessimistic about the so-called V-shaped recovery is because there's something which economists call hysteresis, which is, the longer you're unemployed or the longer it takes for your company to reopen or get grants or loans, the more likely it is that it won't open, the more likely it is you'll stay unemployed. And I think these lingering effects these domestic effects will actually be very important in the Chinese economy in the rest of this year and going into next year. And the trade side, which perhaps China might have wished would come to its rescue back in January, if you could foresee that far, obviously, as Iris said, is really just dead in the water. That's just not going anywhere, simply because the West or the Western economy and most of China's export markets are in a funk, and they're not going to get out of it for quite some time. So not particularly bright outlook, I'm afraid.
Thanks, George. Jörg, how are European companies looking at this situation, both in China and then maybe also in Europe?
Thanks for inviting me, and it's very intimidating to be asked to speak after George and Iris, frankly. But I try my best to show maybe the bottom-up business point of view, what's going on here in China. I think, our chief economist said once 2 weeks ago that this is the end of economic modeling. It is just, we are kidding ourselves if we think where this economy and this country and other economies are heading. So we have to think in scenarios, meaning how long is the lockdown period? And then, of course, we can't even come up with a figure, but it's more a range of data. World Bank told us 2 or 3 weeks ago in a report that they expect China to grow between 1% and 2%. That matches the anticipation that we all have. So the end of economic modeling. So what I tell you now is just virtually really from the trenches, and you can draw your conclusion out of this. And if you ask me where this is all going, frankly, I have no idea. So how did we get through this? When you look at the surveys with our companies, and we launched one on June 10th, is that they have been experiencing very strong collapse of sales, and they're all very aware that this year is going to be virtually very difficult and so forth. So the survey was actually quite sobering and pessimistic. So when the economy started up in March again, when you talk to my colleagues that are heading major car companies here like BMW, Audi, Mercedes and others, they couldn't believe their luck how fast they were selling cars. Premium class cars, they are possibly, I know from one company, I can't tell you which one, they're back this week at the anticipated sales for April 2020. And the other 2, 3 majors are going to be back in May. And when we all met to share intelligence of what's going on, none of us could explain why the hell we are selling so many cars. And of course, cars means that all of us, including Army Chemicals, doing well. The supply chain is deep, 4, 5, 6 layers. So there was a surprise. Is it that people really want to avoid subways, want to avoid buses, want to avoid taxis? But I mean, if you want to avoid a subway, you possibly don't buy a Mercedes-Benz. But no, there it is. And we are all puzzled. At the same time, we see that some schemes that we all thought are going to be big in China are totally collapsing or disappearing. For example, what everyone was hoping here is the share car service. This is absolutely dead. And if you ask people, it will never come back again. No one in China is going to share a car anymore. So you have manufacturing coming back. Myself, again, in chemicals, we had a surprisingly strong end March and beginning of April. And now it sort of fizzles away a little bit. That's what George was indicating. So the guess I have is that we had basically a comeback. People wanted to produce again. They ordered, they produced again and tried to push these into the sales channels. And then they were hit by the demand shock from the 3 largest economies in the world, that basically Japan, Europe, and the United States. So in a way, we really went from anticipation and surprise manufacturing rebounding now all of a sudden with a big question mark in many areas. For example, my company doesn't sell anything, exporting anything, but my customers are all exporters. So we are now missing out on the summer season in Europe and the United States. They don't ask for anything, and there's a lot of problems for big companies and disaster for small companies. So is that a recovery? Yes, partly, but we are caught between a rock and a hard place. We come out of the domestic shock here, and we are entering a global shock. And in between, we were lucky enough to have at least 4 weeks of breathing room. Now, manufacturing was okay coming back. And again, the worry is that it might go soft. Service sector was a disaster during this period of time. Airplanes didn't leave. Just with my colleague Jacob had dinner at the adjacent 5-star hotel, and there were 3 guests, 20 guests staying there, and so on. This is something which might come back in certain areas. I mean, you always need a haircut. You might want to do stuff, but basically, are people going to go to movies? Unlikely, at least for the time being, worried about catching a virus. People are going to be going on tourism to Germany or other places? Unlikely. So in a way, this kind of reluctance of the Chinese consumer will also translate into basically a real problem for the likes of Harrods or in Frankfurt, the Goethestrasse, where all of a sudden, you know, Chinese that spend 2, 3, 4 times what German tourists spend will not pop up again. And the figure I have at the back of my head is that Chinese tourists globally are worth $300 billion US. So if they don't travel, I mean, we really got a problem. So what George was alluding to, so how do we see this? The PMI came out and sort of substantiating the fact that my sales have gone soft in manufacturing. It's a W, but a W in the sense of a chainsaw, you know, and it's painful all the way. And we don't know where the end is going to be. How do we get out of this crisis? I guess there will be consolidation going on in China. The SOEs will be propped up. The private enterprises will possibly be parked under SOEs. So I see a strong rebounding of state-controlled economy here. And us as foreigners, we try to sort of make sense out of that and see if we can actually convince the Chinese government to open up again. Because Chinese history teaches us that whenever they had a major crisis, such as in 1978, such as in 1992, as well as after the Asian financial crisis in 2001, they actually opened up the economy and they earned double-digit growth. So we're trying to say, why don't you do this again and don't replicate the 2008, 2009 comeback story that was basically throwing money at the economy. So in a way, that's where we are in business, totally puzzled, of course. The report I was talking about, the label is Navigating in the Dark. That says everything. And of course, there's a deep-rooted fear in this system here that there might be a recurrence. And it has to do with the fact that it's an intransparent system. The president has pledged that he's going to win the war. They labeled it a war, so you have to win it. So if that comes back, then A, he has something to explain why he didn't win the war. And second, can China afford a second severe lockdown in the magnitude they have shown over the last 3 or 4 months? I don't think so.
Many thanks, Jörg. Before I get back to you with another question, I would like to invite all the participants to ask questions through the Q&A button, which is at the bottom of the screen of everyone. I see already one question, but let me ask one question to everyone. George, would you like to respond?
Yeah, I just wanted to come back to something that Jörg mentioned, and of course it's absolutely fundamental to this whole discussion. Well, perhaps not on a kind of the next quarter's kind of horizon, but certainly for the balance of this year and 2021, maybe even beyond that. I mean, the fundamental issue is, if we were fortunate enough to, I mean, as a species, I mean, somewhere in the world to develop antiviral treatments that worked in hospital, let alone a vaccine whenever and if that should ever come about, then of course this is a different discussion, because then obviously we don't have to have social distancing and people will be more comfortable about a lot of the things that they currently feel very nervous about and very anxious about. But I think that the point about, you know, can governments, not just in China, but of course in Europe as well and elsewhere, can we maintain sufficient control over the infection while at the same time gradually reopening parts of the economy? Can we strike that balance in such a way that, you know, that we might not get brilliant outcomes, but we might get, under the circumstances, satisfactory outcomes? What we don't want, of course, as Jörg implied or explicitly said, is, you know, we don't want another kind of second wave of infections that basically spark an eruption of fatalities and so on, and overwhelm our health systems, which would trigger another major lockdown. I don't think, you know, I mean, the social, in China it might be different, of course, but I mean, the social acceptability of that and the, you know, the efficiency with which governments might be able to manage that would be quite testing and challenging, I think. So it's pretty tricky, and we're hostages really to epidemiology and, you know, the forces of economics. So we need the epidemiologists basically to figure this out.
I mean, I wanted to follow up exactly on this point. I mean, my understanding is that even in the best scenario, a vaccine will not be available before the end of the year. This is something that's very unlikely, at least applicable on a large scale, so that people can really get rid of the fear to be exposed to contagion. Now, in Europe, we are discussing the relaxation of lockdown. So this is happening basically these days in many countries. And the eyes are very much on China, because I mean, your outlook was not very positive, but my impression is that in Europe, we have the impression that actually China is doing quite well, exactly because of these positive signals. Now, the question is, can Europe, in a sense, look at how China managed the relaxation of the lockdown and the recovery and follow that kind of example? Is something that is realistic and makes sense?
Yes. Let me start first. I located in Hong Kong. It is a very densely populated place, as you all know. But Hong Kong has very few cases, and now we are having 0 cases for 4 days in a row. So what Hong Kong and China has done is that because Hong Kong and China experienced SARS in 2003, so people here and there in China and in Hong Kong knows that wearing a mask, a proper mask, I'm not talking about a cloth mask, I am talking about a surgical mask. That is important because there are a lot of debates whether wearing a mask will prevent the spread of COVID. Actually, here in most of the Asia, and especially in mainland China and Hong Kong, and also in Taiwan, there are no issues, no argument on that, because from the experience of SARS, wearing a mask is extremely important to prevent the spread of COVID. Even though you believe that you are not sick, okay, it is a preventive measure for yourself to get the COVID from others, because now COVID has been asymptomatic. That means there could be no symptoms at all. And I don't know whether I got it. You don't know whether you got it. So wearing a mask is a way to speed up the relaxation of lockdown and speed up the relaxation of social distancing measures. And it will bring the economy back faster. So the cost and benefit analysis is quite simple here. The cost is that you have to wear a mask. People have to wear a mask. Wearing a mask means that you can't touch yourself. You can't touch your mask because they are full of virus. So this is your cost. Inconvenience is your cost. And getting the mask is of course another cost. But the benefits is a lot. That you can go to restaurants, you can go to shopping malls, they will open, and then you will have your job back. That is something that we should, I think, or the government should consider. Even the epidemic should consider.
Quite difficult to go to a restaurant with your mask on, though.
Yeah, well, in Hong Kong, when you are eating, you take off your mask, but it is absolute strict that when you are not eating but talking to your crowd, you have to put your mask on.
Jörg, would you agree that this measure actually is key and crucial to get back to some sort of normality, or at least to be able to work?
Yeah, well, let me say that in this meeting with these bigwigs from car industry and our ambassador, we made some scenarios just to figure out when things are back to normal. Again, in the car industry and in the suppliers industry like chemicals, we thought that initially we have a comeback story. We don't know where this is heading, but it was clear that unless we have a vaccine that is proven and is applicable, there will be no normality. And the consensus around the table was 2022. When we asked the airline and we asked some of the service providers in hospitality, when do you think you're going to be back to normal? We were told that to reach the level of business in 2019, at 2030, you have to basically expect that 10 years, it takes 10 years to be back where they were in 2019. So there was real pessimism that, first of all, Zoom and other areas will cut travel, and hence people also will not go on vacation that much anymore. So I guess that people haven't really grasped the fact there will be no back to normal for at least quite some time, and that the pain will be very much extended because life will change. People will change patterns of tourism, of eating, of meeting, and so forth and so forth. Iris is right. We have been very diligent in mask. In China, Beijing at least, I can take the mask off when I enter a restaurant, but it has been strict. And if you have not put on a mask, people reminded you, which in itself is very interesting because initially the WHO told everyone that a mask is not really needed. Besides the travel restrictions is a bad thing. So you really wonder what kind of advice they were giving. The other point I wanted to make is, yes, we can learn a lot from China, but to me, we can learn a lot from Republic of China. I think Taiwan has been outstanding in this handling of the crisis. The kind of early detection on 31st of December, they screened travelers from Wuhan the kind of lockdown, the kind of measurement testing, and so forth and so forth. I think if you look into a case study on how you prevent a pandemic to spread, Taiwan is a great place. And as some of the journalists wrote, the countries best off are the ones that are basically Republic of China, Taiwan, Germany, New Zealand, happens all are run by women.
Thanks very much.
Yeah, good point. I mean, I think it's important. I mean, obviously, I'm saying this as a sort of a nerdy macroeconomist, but I think of course, the issues of things like wearing masks and contact tracing and mass testing. I mean, all of these things are things that we have to do, and which we have seen rolled out in China and elsewhere in Asia, born of their own experience of SARS, of course. And these things are essential if we're not to go or to have sort of permanent lockdown. We can only actually lift the lockdown if we have these things that become more common and more ubiquitous. But to be honest with you, my own view is I don't think this provides a lot of helpful information about how do we solve the economic consequences of what the pandemic has bequeathed us. Because as Jörg has indicated from some of the industries that he's mentioned, I mean, border controls and travel restrictions, constraints over mobility of labor and of people moving around places. I mean, these things will probably take quite a long time for us to either resolve or find new ways of kind of living with. The confidence with which firms basically invest in the future, which basically requires, these are long-term decisions that companies make, and they want to check a lot of boxes, which I think at the moment they're not really able to check, will be a big constraint. The demand side of the economy in China, I mean, which is the bit that I referred earlier as being the weak side. I mean, disposable income is really down in the dumps, partly because of rising joblessness or people not getting wage income support on a scale that matters yet. And just the willingness and confidence to be able to go out and spend money and borrow money. These things, I mean, it's very easy when economists talk about confidence, it's like you wish you could switch it on and off like a light, but they don't really happen very easily. And I mean, I do think we can learn a lot from China's experience about how to do lockdowns, about what happens to mitigate the spread of infection through the coping mechanisms I mentioned before. But actually, if anything, the degree to which the Chinese state and local governments have been able to come to the rescue of the economy actually is also quite instructive. They haven't really done very much. I mean, relative to, let's say, some of the more grandiose programs that have been announced by the United States or Britain, or even some countries, Germany, other countries as well. I think in a way, I mean, the government in China is a little bit kind of constrained, actually. They don't want to repeat the mistakes that they made in 2008 and 2014-15, but they actually don't really have very much else to put on the table that is likely to work. We are all in this bind, actually, and I think that the most, I mean, from my perspective, the thing that I think we have most to learn from China is just to watch how they manage this delicate balancing act between reopening the economy and control of infection. That, I think, that's very instructive for us to be able to see how that evolves.
Thanks very much, George. I would like now to turn to the questions. We have a lot. Maybe one which is related to a few points which were already made. I mean, your outlook is quite negative, but to some extent, private sector seems puzzled. And in fact, there is a question, why stock markets are betting on a robust recovery?
Okay, let me start this. Because they actually look into the QE that the central banks have been put on. there are unlimited QE, which is very exciting for asset markets, not for economies, but for asset markets, because unlimited QE, as you can imagine, it means that it is a competition of who pressing the buy button first. If you press the buy button first, for example, I press the buy button first, and then you press the buy button second. After me, I sell it, you buy it. Okay, sorry, your profit will be smaller than me. So it is a monetary game. It is more monetary, more asset prices related rather than the real economy activities. But it cannot last long, because when over a quarter or so, when you read company earnings reports, you will see that people are not buying products, people are not buying services like airline services or another new smartphones. I just put on a Twitter poll whether you will buy a new phone in 2020. Most of the people answer no. So this is something that you will have a exciting moment before the earnings report come in. Afterwards, then you read the earnings report, then the dream will actually deflate.
George, do you also agree that it's mostly a monetary kind of effect rather than reflecting a real economy, expectations about the real economy, what is going on in the stock markets?
Yeah, I think I do think this is what we call in the trade a bear market rally. So this is a bounce from a very kind of sharp decline that we had earlier. And I don't think the bounce is sustainable. I mean, I think if somebody announced tomorrow that we've got a vaccine that works and it'll be we can produce millions of billions of them in 6 months, then obviously there's a lot for stock markets to get very excited about. But this is not a particularly great environment for stock markets, to be honest, because I mean, what I think is there's a script we haven't really spoken about here, which we need to kind of bring out on the table, because the only way that governments, including those of China and the United States, United Kingdom, EU, and so on, the only way we can basically respond to what's going on is to create more debt, right? This is what we've done time and time and time again since 1980. Every time we have a crisis, we create more debt to try and solve it. Personally, I think this is the end of the road, because the amount of debt that we're going to create is so big this time round. I think we are going to have to do other things over the next few years to try to mitigate and manage that process. And one of the ways in which, well, there's only a couple of ways you can deal with over-indebtedness. You can either default, which is not a particularly attractive proposition because nobody will lend to you in the future, or you can create inflation, which we may well end up doing over the next few years.
Yes.
And or you can embark on what the Chinese are very practiced in doing, which is financial repression, which is to keep the level of interest rates so far below the rate of growth of GDP that eventually over time you basically diminish the debt burden. And I think that's what we're going to do. But this is not a good environment for savers. It's not a good environment for stock markets. I mean, not all equities will suffer, but a lot of companies, particularly the more indebted ones, will. Yeah, so we have to kind of get our teeth around this, because actually this is very early days, but I think this is what's coming down the track over the next 2 or 3 years.
Following up on this point, I think it was quite interesting when, George, you said that the Chinese government is not doing much. What we are seeing in Europe is actually that national governments have put in place a lot of measures, mostly to support income. So to make sure that actually people do not let laid off, or that they keep somehow income. There is a question related to this. Which measure would you prioritize for recovering demand and consumption? And in this sense, is the approach of European governments of trying to make sure that basically income is kept at the right policy.
Yeah, I mean, briefly, I mean, my view is we are forced at the moment to provide massive bridge financing to individuals and to companies in order basically to keep companies alive that otherwise shouldn't go bust. You know, there's no reason for them, because we've created this crunch in demand. I mean, it wasn't a sort of a natural order of things. It wasn't because of high leverage or high inflation. We created this because of lots of different reasons to do with healthcare and infection and so on. So we have to keep people whole. We have to keep people with spending power. We have to give them wage subsidies or pay their, give them tax relief or mortgage relief, or give companies grants or loans to keep them in business. These things, this is what I call disaster relief. This is not economic stimulus. And the disaster relief fulfills a very, very important function. But, you know, you can't really do demand stimulus when people don't go to work, because they're not going to be able to spend money. So there is a time for demand stimulus, which will come. But at the moment, I don't think it would gain much traction. It's interesting now that in China, they did very little other than to, they cut, VAT, and they gave companies some reliefs, and they, PBC provided a lot of liquidity and cut interest rates and reserve requirements and so on. But I think that now we're beginning to see the Politburo, Standing Committee, the State Council authorize new borrowing, additional special purpose bonds for local governments to issue, more infrastructure. So they're starting to basically branch out a little bit, or in terms of demand stimulus, from what was previously their own version of kind of disaster relief. So we'll see where this goes and how effective this becomes.
Jörg, would you agree with what George said?
How can I not agree with George? I mean, this is impossible. I mean, first of all, I think the toolbox is much more limited. 2008, 2009, debt levels were much lower. China had a lot of catching up on infrastructure to do. Now the debt burden is quite high in local governments as well as also in private households. And they have the most magnificent infrastructure in the world. So where should they put the money? Of course, there will be a spending spree on electronic infrastructure, 5G and so forth, but it's limited. So at this stage, we are at 2% of GDP. And I guess also the Chinese government is waiting what really happens to the economy. I mean, as everyone said in the beginning, China went in first and comes out first. And frankly, again, we don't know if that's just a W, is it an L, or what is it going to look like? And that's also the reason why I think the Chinese government put the NPC to late part of May, to the 22nd of May, in order to get a feel of, how bad is it really? Because the NPC is supposed to then unleash a stimulus package. And again, I totally agree with George. We are now looking at a much more diminished toolbox, and they have to figure out from disaster relief to demand stimulus how that is going to work out. But I guess that everyone has to understand that in many areas, in particular on the service sector, you have to be just clairvoyant that this is in many cases not going to come back. Again, the airlines assuming they will be back on normal conditions in 2030.
I have a couple of questions related to trade. And the first one is the following. How will the crisis affect global supply chains? Will companies relocate part of their production back to Europe?
Okay, let me try this first. Actually, I have been asked many times after the COVID, actually before the COVID, even the trade war, during the trade war between China and US, I've been asked about this question. So the COVID actually reinforces the thinking of this line. So the thing is that you have to have another cost and benefit analysis. So if you move the factories out of China, move it back to, say, Europe, how will it be imagine the supply chain in Europe. For example, if you are producing an electronic device, do you have all the raw materials that you need? The screen, the silicon, and the silicon for the chips, and also the cameras. All the cameras in the smartphones and the pads, etc., are produced now in Asia. Of course, not just China, but are all in Asia. So how do you source from it? If every companies move their factories to their home country, then imagine the logistic around the world. The smartphone, for example, a smartphone, it has more than 200 components from all over the world. If everyone moved the factories back to their home countries, imagine the logistic. That's one thing. The second thing, imagine the cost of these products. How would it cost, including the transportation cost of the parts and the labor cost out of China in Europe, for example. And then imagine how your consumer can pay for this product at a higher price, but maybe at a slightly worse model, or less or a downgrade model. So in the post-COVID situation, when jobless rate is high, wages are cut down, are they willing to pay for that? The wealth gap will be very, very large. And I think that's answer your question, why the people wants to buy an extra car, which is a Mercedes, because the wealth gap actually are wider after the COVID-19. And therefore people with the money, they will buy for their health. The extra cost is like buying an insurance for the health. So this is something that we need to consider. So if that is the case, just imagine that is the case, everyone move the factories out of China. China will do the same because it has no choice. China's companies that now have factories in Vietnam or in some R&D in the US, they have to move back everything to China because everyone is moving back. I have to move back too, because I need to protect myself too. So this is something that is quite, I believe, for the coming 1 or 2 years, quite unimaginable. Hopefully that after COVID subsides and things get back normal within 5 years, then this kind of idea, decoupling idea, can dissipate when time goes on. Otherwise, we'll have really a deglobalized and at a very high price for everyone.
When you look at the surveys we have done with our members, 10% say they're going to consider relocating. If you look at AmCham, I think they came out yesterday or today with a new survey, 10% say they're going to reconsider it. And when you ask our members, are you going to invest more in China? Just recently, 10% says yes. So in a way, it's actually not much movement. But if you look into the Koreans, Japanese, and Taiwanese, yes, many of them actually are lured back by their governments or moving out. For the Americans and Europeans, frankly, it doesn't make much sense. Home turf is very far away. And as Ari said, transportation and so forth is an issue. And on top of it, of course, I mean, it's hard to replicate China because it has the best infrastructure, it has clusters with very educated people. So even if you want to relocate, do you get the same in Philippines, Cambodia, or other places, or Vietnam, for example? And we see companies moving to Thailand, but there the prices go up very fast because it's always small markets. And then supply chains normally are directed by the multinationals that pull the SMEs. And the multinationals, like my own, we look at everything 5 times now because we can't afford anything really. We want to actually figure out how we actually survive this thing before we consider relocating. But what I see as a shift is not moving out of China, what I see is a diversification in for the new project. Do we actually want to invest in China or elsewhere? So I don't see moving out. I see sort of a better scrutiny and screening of new investment in many locations. But again, I think all of us are in emergency mode. Very few areas where the government is telling us really think about it. I mean, my company is also in pharmaceutical precursors. That is going to be a topic because the government says, I really want antibiotics in other areas closer to home, and this will be sponsored and financed and so forth, in covering the cost of relocation that Iris was talking about.
Yeah, sorry, I missed the question because actually I had a Zoom crash, which I've managed to kind of come back in. But just to briefly supplement what I've just heard, I mean, I think it is, of course, true that that any kind of form of deglobalization or shortening of supply chains, or you know, doing it yourself, or companies doing a just-in-case attitude towards production rather than just in time. All of these things will impose costs on companies and prices for individuals. I mean, that kind of goes without saying. But to be honest, my strongly held view as a consequence of this pandemic is just to corroborate what I thought was going on beforehand, you know, before COVID, when we were only talking about such innocent things, quote unquote, as, you know, trade wars and geopolitics, which was basically that people, I think, are just more wary about sole source suppliers. So whether it's a particular country, China, or could be anywhere else, or whether it's a particular company, I think diversification is really the name of the game here. I mean, just speaking from my own experience in the United Kingdom, you know, it's just unacceptable, we've learned, for us not to be able to have some capacity at home to produce medical equipment and gowns and, you know, testing equipment that we have to rely on shipping it halfway or all the way across the world. I mean, just, we're not going to do that in future, I think. And so I think a lot of people will be kind of focused on diversification of supply chains and certain kinds of securities that we value, like health security. We will do these things more ourselves in the future because it's just politically, you know, there's just no other way.
Picking up on the trade war, there is a question on it. Do you see a demand for temporary tariff protection driven by an emergency basis in the upcoming months?
So demand for?
A temporary tariff, so protectionism. Oh,
protectionism. Well, Jim, just apropos, I mean, there's a very interesting book that just came out yesterday by two of the world's prominent trade experts, a guy called Simon Evnert, who works for a trade policy group in Switzerland, and Richard Baldwin, who works for, I've just forgotten the name of the think tank in Geneva. But they just produced a book with lots of solicited chapters from trade experts, you know, basically talking about why, you know, we mustn't let this crisis manifest itself in greater protectionism, which has been growing anyway, not least because of the US-China trade war, but for other reasons as well. But, you know, I think this is, again, it's a political issue, and it's about the degree to which we can you know, sustain levels of engagement between ourselves within, you know, the Western world, and also between the Western China and other emerging countries. I mean, levels of engagement where we do kind of quid pro quo stuff, I mean, is obviously very important for maintaining open borders, but obviously the political climate for that has clearly deteriorated as a consequence of what's been going on since 2016, really. So Brexit, Trump, you know, Chinese nationalism, these things really are not playing to the gallery that we once, you know, heard the music of, and we can, I think we can only hope that we can try and keep it under wraps, but it would be obviously a bad development if we actually decided basically to use tariffs and and trade restraints, non-tariff barriers in particular, for competitive advantage. I think it's one thing to do it if you say, you know, in future, we're going to have to produce some of these things ourselves because we can't afford not to do that politically. It's another thing where you try to seek competitive advantage by doing things that actually help nobody in the end.
Still on trade, do you think that the corona crisis could lead China to focus its trade more on its neighborhood, Japan, Korea, Asian, and so to promote more regionalism rather than globalization? Anyone who has a view on this?
Yeah, let me try this one. In fact, I have actually seen quite the opposite. There are factories owners in Asia that are trying to compete with China. That means moving away their factories to other areas or maybe even their hometown within Asia to be from this COVID-19. The intention is that to take advantage of this COVID-19 and then try to re-engage the other Asian economies to have less linkage with China, but more linkage for the rest of Asia. So the RCEP, that means the regional trade association or cooperation led by China, is now facing more difficulties than ever within Asia, because this is a time, especially leading from South Korea, Japan, and Australia. They are trying to alienate China from the regions integration, the Asian region integration. So this is something that I believe will take a few years to achieve. Whether they will achieve it is another question, but this is now their intention. And this intention is quite clear from the top-down level. So from the high level of the government, of the Asian economies government, down to the state enterprises, and then to big conglomerates in the economies. So this is something that we really need to watch out for, because as I've said, doing something like this means that cost will increase and prices of the final products will also increase. And this is not a very good time to do this. But politically, it could be a good time, because if you really don't want China to be the world's #1 or getting even more economic power, then this is the right time. Yeah.
Maybe let me move to another question. I mean, before the COVID crisis, environmental issues were key also in reivindications in China, but also very high in the European agenda. Do you think that the recovery after COVID will integrate any environmental measure? Anyone who would like to take this?
Well, I can imagine that there will be a lot of soul searching what comes first, economy or ecology. And that really depends on the magnitude of the global crisis COVID unleashes. I mean, we talk about the US, Europe, and China, but to me, the big problem is Africa and South America. In particular, as a European and you live in Europe, of course, a concern is if the Black Continent has a disaster, it's not just that migrants are coming again to our shores, but also that civil wars break out and so forth and so forth. So in a way, frankly, again, for us, the end of economic modeling also means that we just have to keep our ship floating And we have to see how this all unfolds, and then we can look maybe in diversification, we can look in new projects. Again, also the collapse of the oil price is a complete disaster. You know, my company is in oil. We assume that 2020 the oil price will be around 60, and now we're basically can virtually get oil free of charge. So again, I just must say it's a very humbling experience to just hang in there, try to keep your companies going, your people employed, but otherwise you don't make big jumps.
George, would you like to jump in this?
Yeah, not my forte, to be honest. Not sure that I've got anything of great value to say, but if anything, I think the way in which government, I mean, with a small g now, the way in which government has been thrust back into the center of the kind of political economy all over the world, really, I mean, does make me think that the prospects of making progress on, you know, climate-related and green targeting, you know, will be stronger. I mean, when I say in the future, don't hold me to a time frame. I'm not saying the next 2 years necessarily, but I think that this, I mean, the involvement of government in economic activity over centuries is not something that tends to kind of ebb and flow that often. I mean, we do have ebb and flow, but actually, you know, really once government is kind of ensconced in the middle of economic decision making, it's very difficult to dislodge it, and politicians and people in power obviously are very reluctant to give it up. So my only kind of thought about climate change really is because government is now somewhere where maybe a lot of climate protagonists, you know, would have wished it to be, for reasons that were completely extraneous to their original purpose. You know, that maybe the initiatives for climate change in the future will have more traction. I don't know. It's just a thought.
Okay, we have reached 3 p.m. in Brussels, which means that basically we are at the end of this webinar. I would like to thank everyone. What I learned is that we are in a situation of extremely high uncertainty, that the picture is quite gloomy, especially for certain sectors. But I think Iris fleshed out a bit of optimism in the sense that the recovery is possible. And in this sense, I think that there is something that can be learned by Europeans looking at the experience in China. Thanks very much to everyone, and I hope to see you again soon. Goodbye. Bye.
Goodbye.
Bye.
Bye.